Good morning. My name is Vladimir Tikhomirov. I'm chief economist at busiest Global Markets, and I'll give you my view for the coming week in the macro area. The coming week is going to be one of the most heavy in news flow during this year. There are a lot of news and very important news for the market, and moreover, the importance of the week is also strengthened by the fact that after this coming week, many markets are going to shift over into holiday mode. Christmas holidays are coming, and then we'll see the New Year and the Russian holiday season, which would last 10 days of January. So, which means that the activity during this week is going to be high, but it is going to be also very important in defining the trends up until the end of the year. To start with, this week is going to see at least two key political developments. One is in the U.S. The final vote on approval of Biden as U.S. president and the approval of the election results is due today on Monday the 14th. This could actually put an end to the continuing saga over the validity of US presidential elections, but this might not be the case. We have seen already some rise in street activity, protests, etc. So we're going to see what's going to happen in the US this week. In Russia, on Thursday, the 17th of December, Putin is going to give his annual big press conference, answering lots of questions. And given that over the past few months we have seen a lot of developments in international area as well as domestically, it would be very important to see what Putin has to say, and of course that would be something that would be watched quite closely by many investors. In other areas, in the monetary policy area, central banks, quite a few of important central banks are going to deliver their decisions. There are two. One is the Fed. The decision is due on the 16th of December. I don't expect any change in the rate policy, but it is possible that the Fed could actually decide to increase the level of support to the U.S. economy through increasing the volume of asset purchases, particularly because hopes that U.S. Congress and administration could reach a deal on the new package to support the U.S. economy are still not moving forward. The discussions are continuing, but the progress is still very much in the clouds, which puts a lot of pressure on the Fed to act. Investors will be watching very closely what the Fed has to say and whether it's going to deliver. If not, that could be a trigger for quite a significant correction in US markets and actually in the world markets as well. On Friday, 18th of December, Russian Central Bank is going to meet, and I don't expect to see any changes in its monetary policy, particularly given the fact that over the past few weeks we have seen a very significant rise in inflation. Currently, inflation is running close to 4.6% year on year. I actually downgraded my inflation target for the year from 4.3% to 4.7%. Perhaps it might be even inflation might be even higher, somewhere around 4.8% by the end of this year, which basically means that the central bank does not have a lot of room to maneuver. Monetary easing is obviously not on the books right now. In other areas, the coming week will be very heavy in statistical reports. Basically, all major macro reports for world's leading economies are due to be published this week. That includes industrial data, trade, services, Russian monthly macro report is due on Friday 18th as well. That would show us the state of the economies last month, and actually could give us some better understanding as to what to expect in the coming months in terms of macro developments. And finally, one other thing that I wanted to mention is that ruble last week has appreciated below 73 rubles to the dollar. That's the highest level we've seen since late July this year. This move in the ruble was driven almost solely by large investor inflows, investment capital inflows to the Russian market, both to the equities and bonds, which supported the ruble move. However, I feel a bit uneasy about this big drive in the ruble. I think that it's a bit overdone, particularly if we look at the current situation in Russian economy as well as in the global economy, and particularly if we analyze the drivers behind the recent rally, which are two. One is actually expectations that the new packages to support larger economies would be coming very soon, and as I mentioned, it's not a done deal in the US. And the second, that the mass vaccination of the population would lead to the break in COVID and would change the trend to a better one. Again, that's not done. We have to wait and see whether this vaccination helps, and that's a matter of 2 to 3 quarters away from now. So, which means that it's not impossible that there could be a correction in the global markets as well as in the ruble rate. That's all on my side. Thank you.